Hey, what's up, trend traders? My name is Rainer and welcome back. So, as you've already known by now, the music is back, right? Because I had quite a number of demands, from traders on social media. They're telling me, Rainer, I really like the music, it's so catchy, why is it gone? So I've decided, you know what? I'll just bring it back, because, since you guys enjoy it so much, so why not just bring it back? So everyone will be happy. So, I'm actually very receptive to feedback, comments. So, if you have anything, that you want to voice out or let me know, feel free to let me know, right? Through email, social media, whatever, I'll take in your feedback seriously and I'll see what I can do, to make things better for you. So that part I'm covered. So on this week's market analysis, I'd like to share with you on the trade on dollar yen, right? Because we saw the dollar yen exploding higher, right, over the last few days. So I guess the key questions on traders' mind is, how high can the dollar yen go? So I'll look to cover that particular currency pair this week, and also look at a couple of trading opportunities on the New Zealand dollar, on copper, as well as share with you the current trade, which is the soybean trade, and let's see how it's actually working out right now. So all this and more in this week's market analysis. I'll see you there. Okay, so this is the weekly chart of dollar yen. So let's look at it historically and understand what is the price action structure of dollar yen. So the red line over here I got is basically the 20 EMA. The blue line is the 50 period moving average. And if you will watch my previous video where I talk about how to use the moving average in a trending market, I said that I use the 20 and 50, but there's absolutely nothing magical about these two moving average. I use it because it fits into my trading plan and I find that it works for me. But for other traders out there are some who use the 100 or the 200. That is for them. And you have to find something that works for you. I don't use this in isolation, but rather I use the moving average in context with the higher time frame picture. I use it in context of, finding an entry into the market as well as trailing my stops. So I don't use it in isolation. I use it in the context of the bigger scheme, the bigger picture. So that is a disclaimer down there. So there is absolutely nothing magical about it. And so let's carry on. So this is the chart of dollar yen. And looking at which, right, this chart, you see the dollar yen has been in a very strong bullish rally since, I would say, 2012 over here, October 2012, where the rally started. And you see this strong impulse move higher towards the upside. Then we had this consolidation triangle pattern where price consolidated, storing energy for the next move higher. Then what we had was a very weak up move, followed by this period where dollar yen slipped for a very long period of time. I would say this period is close to a year, right? 8 months to a year, where it consolidated, and finally the big move came where it rallied higher, did a slight pullback, and push up higher all the way up to 120s. So over the last few months, again, we see similar thing happening on dollar yen. We had this consolidation once more, a triangle pattern, and over the last couple of weeks, we see this breakout finally, where dollar yen broke out of its consolidation and is currently trading higher. So how high could it go? And the thing as a trend follower is, I don't seek to predict how high dollar yen can go. What I'll look to do is, if the trend is up, I'll look to buy. I'll continue look to trade from the long side or add on additional positions onto my long trades. That's what I seek to do. I do not look to short this market. I do not look to predict where the market will reverse. But compare that with, I would say, other type of traders where they like to look at where the price could potentially act as resistance. And if you look at it, this is the monthly chart, and look at how often dollar yen has been respecting the resistance. We have this clear resistance over here, which is clearly taken out over here. We have this resistance over here, which again price taken out over here. We have this resistance over here. Again, dollar yen has rallied and broke out of it. And right now we have come into another resistance over here, and dollar yen is traded right into this resistance as of now. So the thing is, true, I see the resistance on this monthly chart, but I'm not here to predict that, whether the resistance will hold, whether you push price lower, whether the trend will reverse from there. Currently, I'm only interested in this strong bullish momentum towards the upside. I will look to long only. I'm not looking to short the markets. I know it's coming into longer term resistance area, and that's it. I do know at the back of my head, but it does not affect my trading decision, which is still to stay on the long side. So looking at the daily chart, you see that we had this a very clear resistance here. We have higher lows, higher lows, higher lows, and finally the breakout that we saw over the last few weeks. So right now I'm currently long dollar yen. I'm still long, and I'll be watching how price actually unfolds in the coming week. There is actually absolute possibility that, right now, because we saw that it's currently at a monthly resistance, price will come all the way back down, crashing down, and if that happens, I'll be stopped out for a loss. But if it doesn't happen, say for example, what happened instead is that if we trace a little lower, then you trade higher, retrace higher, lower, and then you trade higher. Well, this is another likely scenario, and if it does happen, I will be still in this long trade. I'll be looking to add on my additional long positions in dollar yen. So basically, I got both sides of the equation covered. If it goes against me, I'll cut my trade for a loss. If it goes in my favor, I'll look to add on additional positions in this current trade. So this is, I would say, how my trading usually go. When I'm right, I look to scale in. When I'm wrong, I cut without hesitation. And this is me, as a trend follower, how I would actually trade the trends. So let's look at another market, New Zealand dollar weekly chart. So New Zealand dollar is, in terms of relative strength, is one of the weakest market right now. Looking at the weekly chart, you see that price has formed a series of lower lows and lower highs. You have lower lows over here, lower lows over here. Sorry, lower highs, lower highs over here and lower highs over here. If you look at the price action structure, we see a very strong impulse move lower. Then it formed this consolidation or a flag pattern. Then it broke out lower. We had this pretty steep retracement higher. And right now, price has plummeted to a pretty low level, if you ask me, right? It's currently a multi-year low. Because if you look at historically the lows, I think the lows this was a key historical low level, was a multi-year low, 2011. This was the 2013 lows, and this is the 2011 lows. And right now, price actually taken out the 2011 lows as well. So it's currently at multi-year lows. I think even took out this low over here. This is 2011 as well. So definitely a very, I would say, it's looking bearish on the New Zealand dollar, and I'm looking to be short on this market. And in fact, I'm already short the New Zealand dollar, and here's where I got short. So basically, look at this 4-hour chart. So on the 4-hour chart, I noticed that the 20 and 50 period moving average acted as dynamic resistance. So what happened this week was that I traded a breakout towards the downside as price traded lower below this swing low over here. Originally, I wanted to get short as price approached this zone over here, but I was too slow. I think I was queuing at a pretty slightly higher level around here. I did not got filled. So when price traded lower, I figured, the breakout would do as fine as well, because I'm actually with the trend. So I felt that there is enough, there could be possibly enough momentum to push price lower. But for those of you who are currently not short, I would say a trading opportunity would reside if price does retrace higher back into this zone again. So that would be another trading opportunity for you if you are currently not short in the New Zealand dollar. So stop loss, I will put my stop loss outside of the 50 period moving average, so it's somewhere around here, because I noticed that the 50 period moving average is acting as a dynamic resistance. So there's no sense for me to put my stop loss exactly on the 50 period EMA, because there's a good chance that price may just touch the EMA, right? Just rally higher, touch the EMA, and then trade lower. That's a possible scenario. So I'll put my stops outside of the EMA, somewhere around here. So that's for New Zealand dollar. Let's look at another chart. How about the copper chart? So copper is another market that I've been paying attention to. So looking at which, right, this is the weekly chart. Price is bearish. We see series of lower lows and lower highs. You have lower highs over here, over here, over here, over here as well. And the blue line, once again, this is actually the 50 EMA on the weekly chart. Again, right, I like to reiterate that there's nothing magical about this moving average. It just so happened that this market I'm watching happens to respect the EMA. So currently you see price trading lower on copper, and if you are, I would say, have a short bias, I would say, check out the 4-hour chart. It presents a trading opportunity as well. The 20-50 period is acting as dynamic resistance, and any chance that, price does retrace higher into this zone presents shorting opportunity for you as well. So last but not least, let's have a look at another product, soybean, which I have been watching closely as well over the last a few months already. I would say a couple of months, 1-2 months. So prior to that, I was saying that soybean, this was the multi-year low on soybeans, this support. Then we had the structure, alright, a bearish structure coming to that support. We see lower highs, lower highs, lower highs, and lower highs coming to support. So what is telling me that the bears are in control, because the bulls are unable to push price higher from the multi-year lows, from this key support area over here. So if the bulls can't push price any higher, and the bears, is constantly in control, as you notice that the price always bounce off from the 20 EMA, the 20 EMA, the 20 EMA, and the 20 EMA over here, and the highs that it's always attempting to make is always a lower high. It's telling you that the bears are clearly in control. So what I had in mind was to trade the breakout towards the downside. So on the daily chart, I had a sell stop order, I think somewhere below this swing low over here. Again, I have a stop of 2 ATR, I think somewhere over here. So what happened was, for a short moment, I was in the money, see price traded lower. Then this week, what I had was price trading against me, all the way back up, squeezing me out of whatever profits I had. And currently closed slightly lower for the week. So, and this is the thing about trading. You do not want to get too edgy or too panicky if price goes against you, because when you trade the markets, it is a fact that price does not go like this in one direction. No. What it usually does is this. It goes lower, it retraces higher, it goes lower, it retraces higher, and it goes lower, and it retraces higher. This is the ebb and flow of the market. It does not behave this way where it just drops like a rock. It happens in news or crisis event scenarios. Yes, it does happen. But in normal times, normal times of the market, in normal trends, you usually see a series of lower highs and lower lows. So clearly for soybean right now, this is the kind of price action structure that you shouldn't be too worried about. Right now, you see price doing a retracement, and I'm guessing, right, if the trend stays intact, there's a good chance that it may just trade lower from here. But again, right, this is the markets, anything could happen. So I wouldn't rule out the possibility that price may actually trade higher and stop me out for a loss over here. And this is why I always have a stop loss in place to get me out of the trade when I'm wrong. I do not want to stay in the trade any second longer if I know I'm really wrong. So I always have, like I've said, both bases covered, right? The first base is if price goes in my favor, I'll look to trail my stops. The second base is that if I'm wrong, I want to get out of the trade immediately. So, the key thing as a trend follower or as a trader is to always manage your downside. When you manage your downside, the upside, right, the profits will automatically take care of itself. So that's all I have for this week's market analysis. I hope you boys and girls find it useful. If you do, can feel free to leave comments below and let me know what you think. With that, I wish you guys good luck and good trading. I'll talk to you soon.